What does China's imploding economy mean for the rest of the world? What is happening in China's economy? China's economy is in a state of flux. The country's stock market has been on a roller coaster ride in recent months, and its currency, the renminbi, has been devalued twice in quick succession. All of this is adding up to a perfect storm of sorts for the world's second-largest economy. The roots of China's economic problems are many and varied, but they can be traced back to two main factors: an over-reliance on exports and investment, and a lack of domestic consumption. These problems were masked for years by breakneck economic growth, but they're now coming to the fore as growth slows. What does all this mean for the rest of the world? Well, it depends. If China's economy continues to implode, it could have devastating consequences for the global economy. China is the world's second-largest economy, and it is a major player in global trade. If China's economy weakens further, it could lead to a decrease in global trade and a slowdown in the global economy. However, not all experts believe that China's economy is in danger of imploding. Some believe that the Chinese government will take steps to prevent a further economic decline. If the Chinese government is successful in stabilizing the economy, then the impact on the rest of the world will be minimal. Only time will tell what effect China's economic troubles will have on the rest of the world. The United States is the world's largest economy. China is the second-largest economy. As a result, if China's economy continues to weaken, it could have a significant impact on the global economy. Although not directly related to U.S. economic growth, China's economic problems could potentially lead to a reduction in the demand for U.S.-made goods and services. The effects on commodities. China is the world's second-largest economy, so when it starts to falter, the rest of the world takes notice. And that's exactly what's happening now. China's economy is in trouble, and it could have far-reaching consequences for the global economy. China's economy has been slowing down for a while. The country's economic growth rate has slowed dramatically in the past few years, and it doesn't look like things are going to get better anytime soon. The effects on other Asian economies. The effects of China's economy on other Asian economies are mixed. On the one hand, many Asian economies are export-dependent on China and have benefited from China's growth. For example, Vietnam has seen a boom in exports to China in recent years. On the other hand, competition from Chinese companies has put pressure on other Asian economies. For example, South Korea's manufacturing sector has lost market share to Chinese companies in recent years. Overall, the effects of China's economy on other Asian economies are complex. In the short term, there may be some negative effects as Chinese demand for imports declines. However, in the long term, China's economic slowdown could create opportunities for other Asian economies to increase their market share in global markets. In the short term, there may be some negative effects as Chinese demand for imports declines. However, in the long term, China's economic slowdown could create opportunities for other Asian economies to increase their market share in global markets. The ripple effect on the rest of the world. The ripple effect of China's imploding economy is being felt around the world. Commodity prices have sunk to new lows, global stock markets are in turmoil, and countries that depend on China for trade are feeling the pinch. The most immediate impact is being felt in commodity-exporting countries such as Australia, Brazil, and Canada, which have all seen their currencies plunge against the US dollar. As China slows down its massive construction projects, demand for commodities has plummeted, leaving these countries with huge surpluses and shrinking export earnings. The global stock market sell-off that began in August has been partly attributed to worries about China's economy. When Chinese shares started tumbling, it set off a chain reaction that sent shockwaves through global financial markets. Countries that have benefited from China's economic boom are also feeling the pain now. What does this mean for the future? The future implications of China's economy are far-reaching and uncertain. For the moment, it seems that the global economy will weather this storm, but there are many unknowns about what could happen next. The most immediate concern is the effect on commodities. China is one of the world's largest consumers of raw materials, and a slowdown in their economy has already caused prices to drop sharply. This is bad news for commodity-producing countries, who are already feeling the pinch from low prices. There is also the potential for ripple effects through the financial system. If Chinese companies start defaulting on their loans, it could cause a cascade of defaults around the world. This could lead to a loss of confidence in the global financial system and a tightening of credit, which would be bad news for everyone. So far, China appears to be managing its slowdown reasonably well. In conclusion, it is evident that China's economy is in a state of decline. This has far-reaching implications for the rest of the world, as China is a major player in the global economy. The knock-on effects of this economic slowdown are already being felt around the world, and it is likely that things will only get worse before they get better. Only time will tell how serious the situation will become, but it is clear that the global economy is facing a major challenge. Thank you for watching this video. Please do subscribe our Nonsense YouTube channel for more videos.